Good morning, Hubert Johnson here with Taxes Made Easy. Thank you for joining us again and watching live on rebroadcast. Today we're going to talk about amending tax returns. Sounds like a simple topic, but it can get a little complicated. And I see plenty of people all the time that make mistakes or are confused about when can they amend a tax return. I had someone just call me yesterday and they thought they needed to hire a tax attorney. All they need to do was file an amended return to fix the issue. It's much cheaper, pay a couple $100, have a CPA amend the tax return than hiring a tax attorney. So this is an excellent topic, can save you a ton of money and answer some of your questions about something that's not as well known as it should be. So again, thank you for watching, and we'll be right back after this short break. Welcome back, everybody. Hubert Johnson again with Guardian Tax Law. Here talking about taxes made easy, and we're going to focus on filing an amended return today. But first, we're going to go to the news. So there's some big news happening out there. One of the biggest pieces of news no one's talking about, and that's the budget. So interestingly enough, there's no news today about the budget. When is the deadline? Tomorrow. So tomorrow, the 22nd, and no news out there. They tentatively have an agreement, but they have to pass it by the House and the Senate today or tomorrow. So again, there's going to be some big news, one way or the other, if it gets approved or not. Will the government get shut down? Anybody's guess. And people probably aren't talking about it because it's been such a typical thing where hard to know what they're going to do with it. So as far as the budget goes, we'll find out today or tomorrow. Even bigger news than that, again, and I've spent a lot of time talking about inflation because it hurts you. It hurts average taxpayers. So first we're going to start with the Washington Examiner. Had an article that came out yesterday, 2:59 p.m. So again, pretty recent, talking about the Federal Reserve. Now, the Federal Reserve this week decided not to change anything, to hold things where they were. The current rates, Fed rates, are from 5.25% to 5.5%. So it's a 23-year high. So for the Fed to hold rates that high is fairly high. Essentially, we're going back to 2001. What happened in 2001? Gulf War. So it kind of puts you in a perspective. We've had this long period of very low interest rates, and now things are surging higher. But the prices, when you have low interest rates, people have more money, things are more affordable, so it drives the prices higher. The problem with that is when prices are higher and interest rates climbing again, all of a sudden it makes everything that's priced higher unaffordable for the average person. And it really takes a bite. So again, that's why I avoid that as much as you can. If there are some quote unquote good debts so far, student loans for education, make sure you're getting a good education, something that will help you in the long run. But also, there's student loan debt, there's mortgage debt. But again, mortgage debt is very expensive, but it might be more affordable in the long term than renting. And you can always refinance if interest rates go down. We don't know when, and expect them to be fairly persistent. And that's what the Fed is seeing and banking on. The market has gone up and down, but the Fed has been pretty consistent holding those rates for the last, I believe it's been since September that they've been holding rates where they are. Now, again, their goal for inflation has been 2%. So, in December, they modified their expectations, say it wouldn't fall to 2.4%. Now that projection is at 2.6%. Now, that doesn't sound like a lot, but again, anything over 2% is seen as high inflation. Now, we talked the other day about how the way they look at it does not include all factors, and they exclude some of the worst factors. Energy, which is being driven through the roof. Energy costs are much higher than in the last 5 years or so. And home mortgage costs. So mortgage and rental costs. So housing has gone up dramatically over the last 5 years. So that's why if you look at the consumer price index, the official consumer price index is at 3.2%. Core CPI is at 3.8%. And then wholesale prices have really gone up, going from 1% to even higher at 2%. And they don't even include the cost of money. So that's the problem is that we're trying to take today's numbers and compare them historically. And prior to 1988, we really can't do that because the government stopped counting certain things. Oh, this is a problem for us right now, so we'll just stop counting it. And like I said, that was done in the Reagan-Bush era. So again, and more adjustments haven't made sense. But the problem is people look at these and they think they can rely on these numbers, and they're not. So talking about the cost of money, there's another article came out yesterday again. One is from the New York Post about how credit card in the last 4 years have gone up. And it's not just credit card fees. So the total fees that people are paying has gone up 50%. So the way they're doing this is they're looking at the total amount that people are paying out in interest and fees on their credit cards. 2020, that number was 51 billion. And today in 2023, it's 157 billion. So that's not a 50% increase, that's a 300% increase. So again, credit card delinquencies are the highest they've been in 13 years. And credit card debt, total debt, is up a record 1.13 trillion. And that was in the final quarter of 2023. So credit card debt, when interest rates are going, a lot of people, I talked to someone the other day, they racked up a bunch of credit card debt when COVID happened. A lot of people use that to survive, to get by. Now they're paying the cost for it, and the 0%, the really low interest rates are gone because they're all variable rates, which means the rate will change with time. Now they're hitting 20, 30% on most credit cards. So people are getting killed by these horrible credit card rates, and it's going to stay high as long as inflation stays high, as long as defaults remain high, because they're still letting people use credit on credit cards, but because there are so many defaults and bankruptcies in the market, their rates are going to stay persistently high as well. So unless you plan to go bankrupt, avoid this at all costs. For short term, if you can pay off the balance. Again, it really hurts people and makes it so they can't afford to pay big, more important bills that can affect, again, we're talking about tax bills, we're talking about rental bills. It really does take your income and destroy any opportunity to get rid of debt. So again, one of the numbers here is cumulative inflation since 2021 stood at 18%, and that's adding year after year. So that's the problem, is when you have interest rates and inflation adding up at 3 to 4% a year. If you add over a 4-year period, you're going to get numbers like 18% in 4 years, which is that's very high, and it's not healthy for an economy. It's very unhealthy for an economy. So the number one thing is try to avoid credit card debt. It is expensive, it hurts, And in the end, well, doesn't help your underlying budget, doesn't help you find financial freedom and resolve the issues that you're facing. And here's a funny thing. I talk to people all the time that they use credit cards to pay off medical debt, to pay off state tax debt. And somebody, a couple weeks ago, I chuckle, but it's like, I wish I would have talked to them beforehand. I wish they would have called me and got some good information. They paid off $10,000 in state debt with the credit card. Okay, the states are paying in the butt. But we could have set up an installment agreement with the state and used that to qualify for a better deal with the IRS. And then they paid off as much as they could on credit card debt with the IRS because they thought they had to. The states and the IRS will ask you, they'll ask, well, how much credit card debt limit do you have? They cannot force you to pay off your tax debt with a credit card. It's just shifting the problem from the IRS to somebody else. And as long as the IRS gets their money, they really don't care that it's going to hurt you and hurt you bad in the long run. So this poor gal racked up $30,000 in credit card debt, and we're going to do an offer and compromise for her. So she sat down, met with us, and she qualifies. We're going to go do an offer. And as we went through this, I pointed out, and I think she asked the question too, well, if we're going to wipe out, I think it's like $60,000. If I hadn't paid that $20,000, would you have been able to wipe out the whole amount? I'm like, yes, ma'am. She's like, can you do anything about it now that I put it on my credit card? Nope. No can do. So unfortunately, she didn't get good advice first. And that's why, again, that's how why we run our business a little different. Call us, get some free information. And I mentioned paying off doctor bills, dental bills, paying off other loans with credit card debt is really advisable. And here's why. If you're paying the doctor or the hospital, you're paying your doctor bills, your medical and dental bills directly, the IRS gives you full credit for those payments. You need to go back to that doctor, you need to be on some kind of payment. Almost all of them will set up some kind of payment. And if you are paying in cash, you can go and negotiate with them. You can probably hear a jet flying overhead. We're right next to Davis-Monthan Air Force Base, and we get jets that fly overhead frequently. So if someone pays off a $5,000 credit card or medical debt with a credit card, they still have the same payments, even though with a higher interest rate on a credit card now, and they get zero credit for the payments as an expense. Whereas if they were just to pay the debt directly, they get full credit for those payments. So get some good advice before you step in it. And when we come back, we're going to focus on amending tax returns. Hi, Hubert Johnson. Thank you for watching Taxes Made Easy live or on rebroadcast. And again, I'm excited for this topic today because I've seen it help so many people, and so many people don't know much about amending a return. If you can do it, why you should do it. So again, I'm sharing this information with the perspective of a tax attorney. And so it's not going to exactly jive with everything a CPA might tell you. Now, you don't want to play too many funny games with this, with amending your returns, but it's something that is a helpful tool for you. So, what is amending a return? So if you file your original return, your original 1040, 1120, I mean, you can amend pretty much any return. And there's a mistake. You missed something. You didn't claim a deduction or a credit that you were entitled to. The IRS is not going to fix your return for you if you make a big mistake. Or if you make a small mistake. That's one of the reasons why I'm very hesitant to say, again, a lot of people are very concerned about the IRS coming in and acting like they're your friend and that they will file tax returns for you. IRS is not your friend. They're a government agency. They're there to do a job. But just yesterday, again, I was talking to someone, and this was with the state, but this is the attitude you can definitely get, is they think they're always right. How dare you question them? And unless you know, and you can show that you know more than them, or that they need to step back, they can steamroll people. And they do it all the time, which really frustrates me because people don't know their rights. So just yesterday, I was talking with some of the franchise tax board, and we had debt going back to 2001? So we're in 2004 or 24. I'm like, well, shouldn't this debt have expired? And there was a husband and wife. For some reason, sorry, they got jets in the background again. Usually they're not out this early. But we get A-10s flying around, as a military veteran myself, I think it's kind of cool, but they can be a little loud. Let's just let that pass. So the debt under the wife's social security number had actually expired or gotten too old and had become unenforceable by the franchise tax board. And we're talking, I think it was around $30,000, so not chump change. And then, but on the husband's, she was saying that it was still good until 2028. So I just asked, well, what's the discrepancy here? What's going on here? Can you explain this to me? And she goes, well, I'm the collector. I'm like, well, that's fine, but I'm entitled to ask for information about my client's case and see if the franchise tax board is doing this right. She goes, oh, we always do it right, and so you should be asking a question. I said, I can't question you as an attorney. That's a whole role of attorneys, is making sure the government does their job right. So I said, look, give me your manager's name and number. I need a manager callback because either you're new and don't know what you're doing, or you have never been corrected before, and I'll help you with that. Yesterday morning, we also did a TFRP interview with a revenue officer, again new, and how they've been trained. They've been trained to be jerks. And I hate to say it like that, but it's absolutely ridiculous, some of the behavior I've seen from new revenue officers. And I've told them, one of the first ones that I had that was absolutely off the wall. I told her supervisors, please retrain her, or I would have filed a formal complaint. I'll give her a break because she's new. But next time she does this, I will file a formal complaint on her. And I don't think she's working there anymore. I don't think she cut it. But they're being trained to be extremely aggressive, which is very unfair to taxpayers, especially if you don't have representation or you don't know the rules better than them. So yesterday, this revenue officer, she was being very aggressive. Why didn't you do this and that and that? And I had to interrupt when she was going beyond the scope of the interview. And I said, look, this is what we're doing. You've got your information. We've already said it all to you. Stop harassing my client. And in essence, that's what I said. And there was a senior revenue officer listening in on the conversation. He didn't say anything because I was right. So I stopped the frustration, stopped them from bothering my client. And so specifically focusing on amending tax returns, I've got plenty of stories. So I was worried about, do I have enough information to fill this? Absolutely. Know your rights. So first of all, when should you amend your return? I've got this article. It's actually from Intuit, Credit Karma. It's kind of right, kind of wrong. But basically, when you amend a return, you're going in and you're changing what was on your original return. So some of the reasons you would do that, if you received another W-2 or income statement, you missed a credit or deduction. Someone claimed you as a dependent on your tax returns, or you claimed someone as a dependent, and then someone else claimed them. If your employer made a mistake on your W-2, or again, you had side income you didn't report, wrong filing status, And one of the things, this is where it gets interesting here. Sorry, I can hear that jet loud and clear. What is the time limit for filing an amended return? This is where TurboTax gets it wrong. And the funny thing is, I kind of scratched my head looking at this saying, like, this doesn't look right. So I went to irs.gov. They give bad information too. They say typically you have to file your return within 3 years. And that is not accurate. So again, this is me telling you that the irs.gov website is giving out inaccurate information. What is the truth? You can amend your return anytime you want. But the IRS doesn't have to take it. They typically do. And I've seen returns amended going back to 2017, 2018, well past the 3 years that they tell you. If the information is correct, you can go in and you can get it corrected. Now, the caveat here is that you're not going to get a refund for anything older than 3 years, unless you've paid the balance within 2 years. So if you paid on the tax balance within the last couple of years, you can get a refund on that. But if it's older than 2 years that you've paid any monies that you paid in, you're not going to get that back. So the main reason why you would amend older returns is to reduce balances. And then, again, there's times where the IRS takes years and years to process returns and amended returns. What if you already get audited and you already got the notice? Can you file an amended return? Yes, but don't delay. So once an audit is done or an underreporting, if it's a simple underreporting, they might let you, depending on the auditor or who's looking at it, they might let you go and do a quick amended return, straighten things up. It makes it easier on them. But if you're just missing, if it's under reporters, they're just looking at what item, hey, you didn't report this one piece of income, we're going to adjust your taxes accordingly unless you respond. If you respond and said, hey, I did have this income, but I had these expenses that went with it, you can file an amended return, show them what it should have been, and then they'll adjust it accordingly. Once an audit is done, then you can't file an amended return. At that point, you need to ask for an audit reconsideration where you can submit new information. But once an AUR is completed, the IRS said, hey, the information you submitted was incorrect. We formally changed it. And then it's much harder to go in and change it. You can always ask to reconsider it, which is a very long, in-depth process or a very involved process. It's always best to report it correctly the first time. Now, I have a lot of people asking me questions right now. Oh, I don't have this piece of information. Or I don't have this. I'm like, well, you have two choices. You can file an original return now and then amend it when you get that corrected information, or file an extension and get that and then correct it. File a correct 1040 or tax return when before October 15th. What if it goes beyond October 15th? First of all, you always want to file timely, which is April 15th or October 15th if you file an extension. For business returns, it's September 15th. The number one, the biggest penalty out there, remember, is failure to file timely. So you always want to file timely, and then you can go back and amend a return. So we're going to do a little field trip here. We're going to look at a 1040 amended return. Now, this is just, from a PDF filler or whatever. I was just wanting to grab a blank one. This one you can actually fill out. So it's called the 1040X. If you're doing a business return, it's a 940X, 941X. So this clearly shows the IRS that you are amending return. It's even in the title. You're amending or making adjustments to the prior return. This information should pretty much be the same: social, spouse's social, etc. If you mess up a social security number and they haven't caught it, you can go in and just amend the return. But here's the tricky thing, and this is what gets people messed up a lot. If you file a return that gets rejected, then you should just change. If it hasn't been accepted by the IRS, don't file a 1040X. You need to change your 1040 or your original return and file that, because the IRS doesn't have an original on file that was accepted. So when the IRS, they need to have an original return that has been accepted to file a 1040X. So don't jump the gun here. And I've seen that happen too, where people get anxious and they just say, oh, or CPA or tax preparer will say, let's file a 1040X. Verify first that your original return was received and processed. Otherwise, they're just going to send a 1040X right back to you. So, and if you've had an audit, so this is where it becomes interesting. You have 3 columns here, which is different than your normal tax return. So you can change your filing status to correct it, and make sure that when you file it, it is corrected. And then you put in, just like the IRS, income and deductions, tax liability, payments, and then refund. What are you supposed to be getting back on this? If it's older than 3 years, or you haven't paid anything in, you're not going to get a refund. Right now, anything from 2020, you're not going to get a refund from that if you, and that's where there was a big push on 2020 to get this filed timely. I mean, the deadline's April 15th to get a refund on 2020, so we're almost there. And if they have the free credit of $1,000 that the IRS will free. It comes out of your pocket, but they gave this to everybody else, so might as well get it too. And then for 2021, there's another $1,600 that they gave out to everybody. And if you don't file a return timely within 3 years, you will lose out on those funds as well. And I have spoken about that beforehand. So in the first column here is the original amount on your tax return. Little twist here. Had this case happen recently where there was an audit. So the IRS adjusted the original return. They wanted the audit amounts in column A. So if you've had an audit or underreporting, you want to put not what was on your original return, but the numbers per the audit. And so you can call the IRS, get that information, but again, that can be very frustrating. So the net change between the original amount and what you're reporting, and then the correct amount that you're reporting to them as your amended return. So they want to see the original, how much is it changing, and then the correct amount on each line. And if it's 0, just put 0. So again, the actual return isn't that complicated. Again, it just goes to dependents. Again, just like any other things, you want to donate, and then explain any changes, and then attach any sheets, or schedules that need to be included. So that's the 1040X. The form itself is not that complicated. There's some people, you can go online, TurboTax, other H&R Block, there's other services. If you have a simple return and you're making simple adjustments, they can do it for you. You can even do it online and amend your return. So some examples of when you want to amend your return. I had a lady that called me up and she owed about $130,000. I don't remember the exact number, but it was over $100,000 that she owed. And she was an elderly woman on Social Security. So she couldn't pay the debt and was very frustrated and flustered that she had gotten this huge tax bill from the IRS. So I asked about her situation. What did you do? What happened? She owned a home in Ohio, got sick of Ohio winters, and decided to sell. In retirement, she sold her home in Ohio, moved down to Arizona, which is very typical, and then purchased a home in Arizona that she could live in for her retirement. Nothing wrong with that. But in her words, to be fair to TurboTax, she used a program cheaper than TurboTax and ended up with this huge, huge tax bill. So again, this is where you need someone that can advocate for you, that can look at your situation and give you good advice. If you're selling a home, if you have investments, if you have rental, if you have anything but a simple W-2 on your return, I've seen plenty of people that just were used to TurboTax or H&R Block and da-da-da. It's fine for your normal returns. But then something happens. And I'm sure H&R Block, they hate when people say this, but it's the truth. There are people there that can help, but the average person there doesn't know what they're doing enough to handle something like this. Get some good advice. Just talk to a tax preparer that does it and has been doing it for 20, 30 years. Go talk to a CPA. They don't bite. A lot of people are intimidated. Oh, they're going to cost an arm and a leg. Well, in this case, it would have saved her an arm and a leg to go talk to someone first and get some advice, and a lot of frustration. She on this home that she sold for about $350,000. She had a mortgage on it of around $150,000, and she didn't claim the $250,000 exemption for living in the home for 2 of the last 5 years. She lived in the home for 20 years. So that's $400,000 of income we should have gotten excluded on a sale of $350,000 home. So I told her, look, I can do an offer and compromise for you, but I would charge you a few thousand to do it because time intensive, and take very labor intensive as well. I'm like, you don't need me. I referred her to a local CPA, someone I know, and he amended her return for just $100 or $200. I don't know how much he charged him, and the whole balance was wiped out simply by amending the return. Just this last week, I had someone call me and say, look, I made a mistake. How do I deal with this? And I said, look, you don't need me. Here's another CPA. Go get it amended, and I'll wipe out the balance. So get good advice. Sometimes the best advice is to go and just amend a tax return. So we're going to dive into this a bit more when we come back, coming up on another break. But again, just knowing what your rights and options are. Sometimes it is a simple, just simply amending your return to resolve your case, and can save you thousands of dollars if someone is willing to give you good advice and not just try to take advantage of you every time you call. Welcome back, everybody. And again, I was just kind of thinking about why the IRS says you can only file for the last 3 years. Why other, and that's on irs.gov. Why do TurboTax and other places just parrot what the IRS has on their website? The IRS is a behemoth. Often the right hand doesn't know what the left is doing. Can't tell you how many times I was told, look, this is the way it should happen. This is the way we should do things. And I'm being told this by someone that's not in collections or isn't in the offer unit. And I'll talk, I've talked to revenue officers that said, well, why don't you just follow an offer? I said, well, for A, B, and C reasons, they don't qualify. It's like, oh, well, I don't handle those. I'm like, well, why are you talking about it? Like, you think you know something. It's like, okay, it's my job to handle them, but I understand that they're good at what they do. Especially there's plenty of revenue officers that are great, that have excellent information, but they know what they work with. And if they're not working with those, they don't have that expertise. They just don't know. So whoever's drafting this isn't familiar with actually what's happening on the ground. And I've had this happen. I was given a seminar once, and this was in New York. And I had a road officer manager and her supervisor, a regional manager here, and they were speaking with me at this seminar. And so I was going through the offer and compromise analysis, and this is the revenue officers again. Don't deal with it. Don't deal with this. Actually, I misspoke. They weren't revenue officer managers, but they were, I think they were some kind of manager. And my ring light is falling over. The problem with this is I went over the 6-year rule, where the IRS can only go back 6 years. And they threw a fit and they both said, hold the phone, that's not true. And I was just stunned that they were interrupting my speaking time. And I just kind of said, okay, I didn't want to argue with them on stage. It was creating a scene. I was just flabbergasted that they would even do that. I said, look, anybody that's interested, come to me afterwards, and I'll give you the IRM citation that says 6 years. I forget what their role was, but they didn't deal with collections. And they told people all the time, 10 years. It was wrong. It is wrong. And people still say it all the time. So that's a frustrating part, is that you can get very bad information from the IRS. And people go back and file 10 years when, again, you talk to anybody in collections, and they'll know that that's not true. That you don't have to do that. So again, who you're talking to, make sure they know what they're talking about, because a lot of people don't. Is very key and important in dealing with the IRS. So again, I've seen older returns, not other professionals have come back and said that, look, you can file these older returns. So I just kind of want to go through some, this is directly from the IRS website. I'll go ahead and share this. And ironically, this is where they have that bad information, but they have some good information as well. So you can file it electronically. Will it be processed sooner if it's filed electronically? The answer is no. They'll get printed out and someone will go through it. So any amended return gets looked at by an actual individual. So it's not processed by the computer. Processing time is at least 20 weeks. That's 5 months, roughly. I've seen it go typically 6 to 7 months when you amend a return. So again, this is not quick. If you're filing an amended return and you have an issue, a collection issue going on, you want to use that filing, send a copy, a representative, or so you can send a copy directly to the IRS, and they can receive and process. They can receive it by fax, they can start the process, but you're still gonna, until it's finalized and fully processed, you're still going to have that collections amount on your account. So what do? Once you submit it to them, they will usually negotiate, knowing that this is working to be processed off the amended return. If you have a revenue officer, any tax returns that you file, original or amended returns, need to go directly to their revenue officer. They will submit it for processing. Always keep copies. But again, you can, if you do it electronically, always send a copy to the revenue officer. But they prefer to have it done sent directly for them. The 8879 is just this electronic signature form. And just to clarify something I said earlier, when you do an amended 1040X, you do need to include all, well, I mentioned that you want to include those, you need to include all the schedules, just like you would with your original 1040 or any schedules that go with the tax return you're filing. Do you have to find a job? You can check, here's the phone number to check on the status of your return. So my computer wanted me to automatically call it. Right, there's the phone number. You have to wait 3 weeks before they can give you any information. And you can call them, you can check on multiple years, etc. But again, wait 3 weeks until they can answer any questions. And that just is normal time for them to receive it and to put it in the queue and say, okay, it's starting. But again, if what I normally do is I verify, yes, it's received. Once it's received and I know that they have it, that's when I'll follow up 4 to 5 months down the road and see, okay, you received it, here's the time where it should be processed, and then I start following up regularly with them, with the IRS, to make sure it's processed. So it shows it's received. And once it's adjusted, it will reflect on your tax transcripts as well. So you can always use irs.gov to keep an eye on your return, your amended return. It will show you, you can call that phone number or see what's going on. If it's been longer than 20 weeks, it might have errors, is incomplete, wasn't signed. They might ask for more information. This is fairly typical that they'll ask for more information. If you have an injured spouse allocation as part of it, it takes longer for them to process those. Add another 3 to 4 months on that. Identity theft or fraud can take up to 2 years. So if you're amending your return and you have identity fraud or theft issues, you just have to follow up on it every few months, because again, it'll be years before they finalize it. They will eventually, and you'll get any refund you're entitled to. But you have to stay on top of it. If they ask for more information, you have to be responsive and stay on top of it. So, last thing I want to talk about here, we focused on the federal this whole time, and on filing amended returns with the IRS. What about the states? You can amend your returns for the states, but each state is different, and they're not so giving. So California, one of the worst states out there, is actually pretty generous when it comes to amending return or filing original. So if they do this all the time, when they go in, they assume someone has income, and they'll tax them accordingly, the worst way possible. California will let you replace an original return or one of their filing enforcements, which is what they call it, pretty much as far back as returns go. They don't have any deadline, which is better than a lot of states. There are plenty of states out there that if they file for you, and I think it's older than 6 years. Again, each state varies. Then they won't let you file again. They won't let you file an original return, even though they know that original return is incorrect, was filed in the worst way for you. So the general principle in law is that if you snooze, you lose. And it's explained a little more technically than that. But you have to act on your rights. And if you let them sit for too long, you lose those rights. So be very careful that, again, it's not guaranteed that you'll be able to amend your return and, forever with the states. It depends on the state. And, again, if you need to file an original return to replace an SFR or a substitute for a return, or a return they filed for you, I'll frequently call them filing enforcements. Don't assume you can do that forever. So, again, be very careful with that. I've seen it burn quite a few people. And it's very frustrating because they know it's wrong, you know it's wrong, but because you didn't take care of it soon enough, the answer can be a clear no. Absolutely no. And I've seen times where when someone filed an amended return, was due a refund, and would have gotten that refund, except for they waited past the 3 years. So it was 4 to 5 years. And so the California had similar rules to the IRS that if you filed an amended return and you hadn't made those payments within, I think it was 1 year, they said, look, it's been 4 years. So either way we slice and dice it, he's not getting a refund, even though if he would have done this timely, he would have gotten that full refund. And there was no way around it. So when you amend a return, and this is what I'm probably going to close with today, the IRS shares information with the states. They all have agreements. What you file is public, not public knowledge, but it is. The IRS has information. These agreements, we can call them treaties, but they're agreements between the IRS and the states where they exchange information. So if the IRS audits you, guess what the state's likely to do? So if you have to go in and file an amended return or adjust things due to an audit, you also want to file it with the state, even if you're going to owe money, because it's much better for you to do it than the state to do it. You just want to make sure it's still within their, I mean, if the IRS is auditing you, the state almost always can still audit you. And same thing with an amended return. If you file an amended return with the IRS and you're showing that you owe more money, don't forget about the state. Amend your return with the state and deal with them as well. Because they will see that. 9 times out of 10, they'll see that, and then you want to deal with that before they find you and they come after you. And it's much easier not to owe the states. Again, they're worse than the IRS in general. So if you have any other questions and you're searching, and again, I feel for people's frustrations when you go to the IRS, you go to who you think is a tax professional, and you get bad advice. So how do you get good advice? You have to do your research. And if you find it on irs.gov, it's rare that they have mistakes on their website. It's rare, but it happens. And just because you read it online, make sure you look at the source, look at who you're citing. And again, for my news sources, I take news sources from all across the spectrum. But when I read that today and I saw that it was the 3-year limit on the irs.gov, I said, in my professional experience, I've seen it happen much further back than 3 years. I did some more digging, and there are CPAs posting that, look, there's no limit. You just won't get a refund. So again, that's the confusing part here. So if you have questions, we offer free consultations. And just like with the people that called in, they just needed to amend their return. I had a gentleman just the other day, and his quick question, didn't have any money, it wasn't worth hiring us for. And I said, and I don't do this all the time, but I said, look, you just need a quick answer. Let me call. And he's like, yeah, it was a New York tax that he couldn't get through. I said, well, let me conference you in with the call. And he said, well, what is this going to cost me? I was like, well, I haven't billed you yet. And I'll tell you what, you give me a good review online, I'll do you a favor. He said, okay. And, just conference him right in a call with the state of New York. Done that plenty of times where if it's a simple, quick issue, and it doesn't make sense to hire us, we'll just do someone a favor, a quick favor, refer them on to someone else that can help them out. And again, that can make all the difference for somebody. So our phone number is 520-485-7371. Our website is guardiantaxlaw.com. You can get plenty of answers by going to our website, our YouTube channel, where many of these videos are being posted. Not all of them have been posted yet, but they are getting posted there. We're on Facebook, Instagram, and you can always check out us online on Google. But get good answers. Don't be afraid to call, get a free consultation. And if someone's trying to pressure you and you're not talking directly to an attorney or someone that actually knows and deals with this on a daily basis, call someone else. Don't be afraid to get a second opinion. When people call me and they say, look, I just want to get a second opinion, I never argue against it. So if they tell me, well, H&R Block said this, I'm like, take it with a grain of salt. So get good information, be informed, and again, don't be afraid to amend your tax returns. Thank you for watching Taxes Made Easy. I hope this was informative, and we're going to be back tomorrow. It'll be Friday. Looking forward to this Friday, and I hope everybody has a wonderful day. And just make sure, again, avoid credit cards. As I joke around with my kids, they're evil.